It's Martin Shkreli. It's June 11th. This is the 8th edition. I can't believe we made it this far of This Week in Investing and Finance. Thanks for coming. It was a pretty interesting week. Big bank called Banco Popular failed, and bank failures don't happen every day, and they certainly don't happen in great economic conditions. So it's pretty interesting to see Santander bail them out, and the way it all happened was really interesting. There was no real kind of warning. So it's a really interesting kind of situation with Banco Popular. Tech stocks fell apart on Friday. I'm going to talk about that a little bit. My Xbox thinks I'm talking to it. I'm kind of going to be a little sarcastic about tech stocks and how much they fell. Bitcoin continues to rally. It's starting to attract attention of mainstream media, including the Wall Street Journal. I was shocked to see the front page of the Wall Street Journal talk about Bitcoin. So it's a pretty amazing phenomenon, and I think it'll continue, but we'll talk about that more later. So let's see. Markets are still up for June and still up a lot year to date, which I think a lot of people are kind of confused about. But some software stocks and internet stocks were down for the week, which got people a little scared. But you can see that those stocks are still up a lot for the year relative to other stocks. And defensive stocks like drug stocks started to go up on Friday. So it doesn't show right now, but drug stocks are up more now than tech stocks for the month, which is kind of interesting. So nothing else really going on in the macro sense. Bonds are selling off a little bit, but the yield curve stays the same. Anyway, the stock market sunk on Friday, and a lot of people were pretty scared. I think that I have a lot of thoughts about this. The first obvious one is that people aren't short and that they're long only, and when they see a percent or two of their wealth evaporate quickly, they kind of realize how vulnerable they are. And it reminds me of that old saying, when the tide goes out, you can see who's swimming naked. And I think that we'll talk about that more in a second, but the whole idea is that if you're not short stocks that underperform your longs, you're in going to be in trouble, I think. So the Nasdaq was down, I think, 2% for the day on Friday, which is a pretty big drop after low vol. But in general, obviously, this isn't a large drop. So you can see that the drop when you put it into perspective, is almost not noticeable. This is a chart of the Nasdaq over, I guess, 6 or 7 years, and you can see that it's a blip, and we're still near all-time highs. So there's very little to be concerned about. Obviously, tops do happen, and this could be the top. Yesterday could have been the top. A week ago, a month ago, nobody knows. But independent of that, it's just sort of fun to keep things in perspective. And I think the most important thing here is that most people don't hedge their portfolio, including hedge funds, which is pretty funny. And I think you have to stay beta neutral. And the idea is that you can't predict the direction of the markets. And if you could predict the direction of the markets, you shouldn't really be trading stocks. You should be trading futures, and you make a lot more money than trading stocks. But I don't think anyone over really long periods of time has proven that they can actually predict the direction of the stock market. So if you can't predict the direction of the stock market, why would you want to be exposed to it? Well, the only answer there is that some people think that stocks go up over the long run, which I don't think that they do. There's this fallacy that because stocks seemingly have gone up over the long run, but after adjusting for inflation and after adjusting for taxes, and obviously after adjusting for selection bias of the U.S., I think that the amount that you're going to gain if the same thing happens, which there's no guarantee, there's really no reason to be beta or long only or beta exposed. Keeping cash and keeping shorts are two great ways to hedge any kind of portfolio insurance. Whether it's cash or shorting stocks for alpha, would mitigate. I certainly didn't have any problems, as you'll see. I had a great week investing. And that blip, which was really sudden and scary, and had everyone wondering and worrying, especially around here. There's people thinking there's going to be a flash crash. This doesn't matter if you follow my advice and hold cash or short stocks. So let's talk about investing process. So I think that this is something a lot of people get wrong. 90% of your time should be spent finding new investments, and only 10% of your time should be spent reviewing the investments you've made. And I think most beginners do the opposite. They spend a lot of time on the investments they've already made, or all their time. And it's a big mistake. I think wasting time is the number one problem with investors, in any professional or beginner investors, and I'll explain more in a second. But as I said, most of your time should be spent looking for investments that are better than your existing portfolio, so you can do a lot of things. One, obviously improve your performance, but also it sort of eases the mental anguish of having subpar positions or losing positions, so you can sort of get out and find better investments, and you're sort of in this Darwinian race to have the most optimal portfolio you can. So if you look at this list, it's a list of the biggest winners year to date. It's a very partial list. It doesn't have every stock in the stock market, but just stocks that I follow. This is a list of, I don't know, probably 20, 25, 30 longs and 15 or 20 great shorts for the year. And if you haven't looked at any of these stocks, you're not making money because you're not smart enough, your method's not good enough, or your analytical ability is not good enough. You're not making money because you're just not looking at these stocks. And if you weren't looking at LOXO, I remember I was looking at LOXO with one of my teammates very closely just a few weeks ago, and we didn't pull the trigger, but we came so close. And the point is, it was on our radar, but this company, Abivax, wasn't on our radar at all. And my whole point here is that if you're not looking at these stocks, don't be surprised when you underperform or you don't have good performance. If you aren't looking at the stocks that end up being the very biggest performers, you have to rewind your process and ask yourself, well, why am I not looking at stocks like TG or Sangamo or Immunomedics or LOXO or Shopify or any of these Weibo or companies like that, Wix or Activision? Why did I not focus on these? And I think that, or vice versa on the shorts, there's plenty of companies that have dropped 50% or more this year in just this partial list. Generally this is also even more of a subgroup of a list. If you think about large moves in stocks that maybe, let's say, were up 50% and now they're only up 10%, that stock fell dramatically. So this is just a very, very partial list of large moves that you missed most likely in the markets. And I think that by far and large, the reason isn't, again, that you don't know how to do research, you don't know how to invest. It's largely because you're not spending enough time on new investments. And all of these were somewhat obvious in retrospect. Again, it's easy to say, but they were all, at least a few of them should have been in your portfolio. And if you have a 5% position in a stock that doubles, you've made 5% for the year, which has probably lifted the burden of maybe about half of your result for the whole year. So there's a lot of companies, and again, I'm not telling you to look at these stocks before or after they've fallen or risen. The point is that you should have looked at them, all of them, before the move that they made was made. Companies like Elena were relatively obvious shorts. This company has nothing going for it, never did. Companies like Alnylam were somewhat obvious longs. They have this fantastic new porphyria drug that could be very exciting, etc. LOXO was very obvious, and I was maybe moments away from buying it. So anyway, if you missed any of these stocks or all of these stocks, if you're like me, you missed almost all of them, then you have to reevaluate, your process, I think. But let's move on. I mentioned a while back about talking about Bitcoin derivatives, derivative trades, and I don't like to go backwards in my in this series, but I felt like this was necessary. Maybe the most obvious shorts here are the payment processors: MasterCard, Visa, Fiserv, First Data, and Square. These stocks could have gigantic downside, much more so than some of the prior derivative trades I mentioned. So these are the stocks to short if you think Bitcoin is going to make a lot of sense. In fact, you could probably put on a leveraged short bet that pays out 50 to 1 or 100 to 1. You know, if we ask ourselves, will there be MasterCard 30 years from now? I'm not so sure. You know, Bitcoin may replace MasterCard and its brethren. So anyway, this month already we've seen a lot of action in biotech. It was the ASCO month, and that's partially why. Obviously, Loxo is our hero here, but Bluebird also had a great day with its data, pretty good data there, and we'll talk about that in a minute. Dynavax also had some data. We'll talk about that in a minute. PTC is up 30%. I'm not sure why, but I'm long it. And that's my favorite, is when stocks that you're long go up mysteriously. It's the market working its magic. Acorda had their phase 3 Parkinson's data. We'll talk about that. This company is sort of dead, as is Vital. Kite has the cart wars with Novartis, and that's interesting. These are all dead companies too, but Neurotrope is something I'm short, and it was up 20% last week. So of the month-to-date stocks, which is a little like looking at the year-to-date list, but more on a month-to-month basis, I got one of these long and one of these wrong, and then all these other companies haven't done too much. And then in the next batch of stocks, I got 3 of them, and these were some of my biggest positions. Alexion and Avexis are 2 of my 3 or 4 biggest positions. And I'm short Acadia, which is my biggest short position, I believe, or second or third biggest. So I had a nice, on the longs for the month so far, I've got 4, and I was sort of on the wrong side of 2, so I'm pretty happy about that. On the losers list, Newlink we'll talk about in a minute. Epizyme had some ASCO data that was pretty bad. I don't pay too much attention to iGate, although I have a friend who's long it in pain. Insys is the fentanyl company. I think they're having a rough time given the FDA's crackdown on fentanyl. Insight is a stock I'm short, and it dropped pretty substantially. And then Unicure is a stock I'm long, but not long much, and it dropped. So I feel really good about having sort of 1, 2, 3, 4, 5 of these right and 3 of these wrong, and 2 of the 3 that I had wrong are pretty small positions, whereas the rest of them are all pretty big positions. So I'm doing really well this month so far. I haven't added a lot to the current opinions list. I have a secret short that I'm going to come out with maybe this week, maybe next week. It's going to be really funny when you see it, and I would encourage you to short it as well. We'll kind of see what that's all about. If you want to know what the secret short is, you might want to sign up for Godel Systems, Godel.systems. Take a look at that, my new software company. But anyway, I don't have a lot of new things to add here. I'm going to start to try to move some of these over, but again, I don't always talk about every stock I'm looking at for competitive reasons. But here's a few stocks, and if you ever want me to look at a biopharma stock or a tech stock, especially a software stock specifically, go ahead and let me know by email, please. So here's the portfolio. I was up almost 1% last week, which was a really great result. Let's see, the markets were down 30 basis points last week. I was up 90 basis points, so I was really, really happy with this result, especially given that I'm only using 46 cents on a dollar, and I'm only exposed to the market by 21 cents. And so far this year, I was up closer to 3%, and again, I haven't really been investing for most of the year. 46% exposure is about half the money in cash. Alexion had a great week, starting to make a comeback. Gilead is like a coiled spring, I think, will eventually go up. It's sort of like holding cash, if you ask me, so you can kind of take it out of this. Regeneron's pretty risky, but I still think the stock will continue to do well. Avexis is super duper risky, and if there's one stock that kind of keeps me up at night, it's probably Avexis, because this could easily be wiped out off the face of the earth very easily. Of course, I think they have cured spinal muscular atrophy, so at the same time, I have some faith in it, but it's a one product, one shot, one trick pony biotech. That's always risky. And again, Bristol Myers and GSK are like holding cash. So if you look at kind of, there's almost 9% of the portfolio is in very kind of boring, cheap, big pharmas. You can remove that, and you can basically say I'm market neutral if you look at that. And again, not much exposure at all, which I think is a great way to make some money. I'm long the hemophilia stocks. Again, I went over that. I think these are the future leaders of biotech. I'm long Omeros. Very exciting data from this company. Also, it's a partial hedge to Alexion, but it really is more about supplementary gains, not or complementary gains, not overlapping competitive gains. And maybe I'll do a deep dive on Omeros if there's interest. PTC is sort of an interesting thesis, kind of half my own thesis and half my friend's thesis. I know the company very, very well. I was shorted a few years ago at $70 or so. It fell apart, and I've recently started to buy it. It's gone up really fast, really quickly. Sometimes that happens. You should be kind of thankful when that happens, but at the same time, you always wish you had more of it. So it's gone up really fast, so I might sell it. It's a totally different investment now. It's up like 30%, and they just bought it. So we'll kind of see what happens there. VSAR is a pretty exciting small company that I like a lot. Horizon is starting to work. Again, it was intended to be a high IRR, fast money trade. It is working. I might get out of it at some point. Protalix is very much a flyer. Bitcoin, I have such a small investment that it's not even 0.1% of my portfolio, but I probably will buy around $1 million of Bitcoin at some point, which will be about 1% of my portfolio. So I'm looking forward to holding some Bitcoin. I shorted some Weibo. It's a Chinese social media company, and I suggest that you kind of follow my lead here. I think a lot of people who, I'm going to speculate on Bitcoin. That's what I'm trying to say. Weibo is a company that is a Chinese social media company, and I'm very suspicious that they'll be able to grow into their valuation. So when I do new types of investments, the best thing to do is to keep a really small investment. You might say, well, why does it make sense to, buy or short 0.1% of your portfolio? That seems like a really kind of weird thing to do. Why bother? And the answer is because you're trying to learn, really, about a new industry, about a new sector, because otherwise, without putting real money into it, you're not going to really, follow it too closely. And by watching it every day and having even a notional amount of money in it, a nominal amount of money, I should say, it's a great thing to be able to sort of monitor how good you are at these investments. They're not going to make you any money or lose you any money, but at the same time, you're trying to again learn about the space. So my secret position is about 30 basis points. I'm going to try to get that higher if I can. There's some liquidity issues with it. Twitter and Snap were great performers for me last week. They both fell pretty dramatically. I'm looking forward to them continuing to fall. Neurotrope is that weird one that went up a little bit. I'm kind of thinking about shorting more. I don't know. Short 4 biotechs that are like mid-cap, weird kind of companies. I think they're all a little overvalued. None of them are like zeros or anything like that. I think of all of them, probably Neurocrine is the most interesting. They all have very different profiles, but anyway, that's that. So we'll see how I do next week, but I'm pretty excited about this portfolio with only 46% gross exposure, and again, beta adjusted probably a little less. I'm pretty excited about this is a really healthy portfolio that balances IRR and cash with some dynamism. So what happened in biotech? Well, Bluebird had some really interesting data with Celgene, and if you look at Genmab, the multiple myeloma space is really big, and I think people sort of don't understand that maybe as well as they should. So Bluebird already has some interesting assets, and so this adds a really interesting asset. They had, I think, 100% overall response rate with a bunch of CRs, so I think that you could see a really exciting upside for Bluebird, so I'm thinking that could be a long. Dynavax is very weird. They have an intratumoral drug, so basically you stab the tumor with a needle and you inject the drug into the tumor. Again, they had some nice data. It was interesting, but I'm very suspicious, and it's not really proprietary technology. It's like this is one of those stocks that's really tricky. On one hand, you have interesting, good data. On the other hand, it's kind of BS, what it really is. And so traditionally, those kinds of things don't work out too well. But it'll be really interesting to see kind of what happens here. Again, I don't like to wade into stocks like that are going to be really controversial, but it'll be kind of interesting to see what happens. The Acorda phase 3 drug for Parkinson's, this is inhaled levodopa. printed out their phase 3 data. I didn't think it was that good. They were spitting distance from missing their primary endpoint, and I think that it easily could have failed. So anyway, I'm kind of suspicious and skeptical of this thing. Newlink, finally, rest in peace. We were short this thing for a long, long time, and it finally has disappeared. So it'll be interesting to see how they survive. But Newlink has kind of always been a meme company, and they've returned to the meme dust from which they came. Epizyme had some bad data. Roche's Affinity had some bad data. So, biotech's kind of had its ups and downs, as it always has, but some good and some bad this week. In tech, I thought there were some cool things out there. Again, I'm trying to really stay familiar with tech as I start and continue to run my software company. But there are more Chinese unicorns or billion-dollar startups than there are American ones, which is pretty amazing. It makes me want to learn Mandarin and spend some time in China. It's such a big market, and they just now are starting to be interested in pharmaceuticals, for instance. So, there's a lot going on in China that, again, as an American, it's sort of hard to grasp sometimes, but it's something that we can't ignore, I think, if you're a great business person. Even Charlie Munger said recently that the Chinese stock market's more exciting than the American one. It sounds like Travis at Uber is finally going to go, either be fired or put on a leave of absence. So I didn't think they could fire him, but I'm winning a bet with a friend if this happens. So I'm pretty excited. E3, the E3 Expo, the annual game show, is starting up, and we're going to learn more about the Microsoft's console. Pandora got bailed out by Liberty. I don't understand why they want to kind of keep this thing going. Pandora's, it is what it is. SoftBank bought Boston Dynamics, the Google robotics company. It's pretty cool. The iPhone has some rumors that it's not going to be able to support a certain data speed, and that contributed to the Friday mini crash, if you will. Alibaba had a big guidance increase that kind of came out of nowhere, and the stock went up 12%, which is really amazing given how large of a company it is. It's already a $200 billion company. AMD had a great week. I guess they're in design win in the iMac, and then also cryptocurrency. They kind of acknowledge that they're doing well in crypto. It's kind of weird though, because again, I've started to look into mining Bitcoin, and the ASIC chips are the place to be. So the Xilinx, Intersil's, etc. are probably a little more exciting than the graphics card makers. So it's a little kind of weird about that. Two South Korean internet companies, Naver and Kako, both had huge weeks, up more than 10% each, I think. And South Korea in general, their market's kind of flying at the moment. Yahoo, the deal is almost done there, so it's pretty exciting to see that close. And then Verizon, I'm sure, will screw it up further. Cloudera had a bad quarter, which was not that bad. I think it just has a big valuation. And then stocks like Snap, Snapchat, MuleSoft, VMware, Viva, Twitter, and Box all had negative 7%-ish or more drops in their stock price, which again, these are all very high beta companies. I'm short two of them, which is very happy days for me. But I think there could be opportunities in stuff like Cloudera where guidance is good, numbers are good, and they have great business models. So we'll have to sort of see what happens there. Q&A. I got a lot of Q&A this week. Someone asked me how to pronounce their name in English and what they should abbreviate it as to be Americanized. This is the dunce cap session. Someone asked me what my take on various world affairs was. Someone else asked me for investment advice with their $2,500. Somebody asked me about dry ships, and then another person asked me why some jobs in certain countries pay more than others. I've had a hard time answering most of these. Angel asked me about Austrian economics. I don't know a lot about economics. It's kind of, believe it or not, somewhat distant from stock investing. When it comes to sort of macroeconomics, it's and trading currencies and things like that, it's a little more relevant, but they're more sort of curiosities than anything else. Somebody asked if luck exists in drug development. I would say that any uncertain outcome we humans can perceive as luck if you are superstitious, or you can perceive it as variance if you're more mathematical. Someone asked me where I would send my kids to school. Probably the streets. Their options were public school, private school, homeschool, etc. So I think the streets are the best school there is. Will I ever write a book? I'm happy to announce that a book is being written. I won't give you any more hints other than that. I'm not saying that I'm writing it, for instance. Anthony asked about Herbalife, and I don't know anything about Herbalife, sorry. This is going to be a pretty short session, but I hope you guys don't mind. How does the average person retire? Daniel asked. If you're making, say, $50,000 or $60,000 a year, I couldn't tell you. I think the better idea is to not bother investing, save your time and headache, and figure out how to get your income a little bit higher. Cash is king, and there's nothing wrong with just holding cash. Fareed asked me about Salesforce. I think it's a great company. I'm not so sure that the stock is the best stock ever. I haven't looked at it too closely, but I follow the company itself very, 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 very closely. Does performance impact mood? Yeah, this is one of the hardest things for investors, especially hedge fund investors, to fight, because they have to measure their performance on a daily or weekly basis, and that becomes very infectious with respect to their data sort of stock picking process. So the performance is really a tough thing that one must deny or fight the impact that performance has on mood and ability. Well, what am I reading? I continue to read the Sam Zell book, Am I Being Too Subtle, which I highly recommend. Looks a little like this. I'm reading General Chemistry by Linus Pauling, which is about a 50 or 60-year-old, not very PC-friendly chemistry textbook. Looks a little like this. I'm reading The Internet of Money, which is a Bitcoin book by Andreas Antonopoulos, who's sort of one of the big Bitcoin guys. And then I'm reading my first fiction book in a long time, called Jesus' Son by Dennis Johnson. So I hope you... a lot of people ask me what I'm reading all the time, and those are the kind of 4 books I'm reading or rereading at the moment. I know this was a short session. Again, I have a lot of different things I'm cooking up for you all. I'm glad the portfolio is doing well. Again, I think Alexion is sort of my favorite stock pick at the moment. I still think the stock will double from here. I like Gilead and Regeneron a lot. They're very different companies. Gilead is kind of, I would say, risk-free almost, with 30 to 50% upside, and Regeneron is pretty risky, but still has probably 75 to 100% upside. Avexis is super duper risky, but could be a 5x potentially. And then the hemophilia basket, I think, is pretty exciting. Could be a 5x as well. Omeros is a pretty cool new emerging stock pick. As I get a little more confidence in stuff like Omeros or Versatris, I might do a deep dive and maybe make them 3 or 4 or 5% positions. But for now, that's sort of where I'm comfortable. The Secret Short should be coming out this week or next week. It's going to be really cool. I think you're going to really enjoy it, and I'll do a deep dive of that, definitely. But that's sort of where the portfolio is at. So you can always email me, martin@thoughtpatrol.com. Check me out on Twitter. It's BLMBro, so Black Lives Matter Bro. And then you can sign up for Godel at godel.systems. You have to sign up with a LinkedIn account, please. If not, you could just email me at martin@thoughtpatrol.com, and we could talk about it there. So that's really it. I really appreciate you guys swinging by. It's about a half a session today, but again, really excited about my portfolio working out pretty well, and looking forward to next week's session. So thank you so much, and see you guys soon.